Yeah, Bajaj Electricals, that one saw a strong December quarter with revenues growing 90%, while EBITDA doubled compared to the same period last year. Margins too saw an expansion on consolidated basis. Let's discuss the quarter gone by with Shekhar Bajaj, the CMD of Bajaj Electricals. Mr. Bajaj, thanks very much for joining in. Let's put the quarter gone by into perspective. A really strong quarter for you, even profits seeing a growth of 74%. Could you break it down for us into how each of the segments of consumer and the EPC businesses performed this quarter?
Okay. Basically, as you have mentioned, there are two segments. One is the consumer segment and one is the EPC segment. So the consumer segment for the last 3 quarters has been growing by 25% plus quarter on quarter, and this quarter also we've grown by 26.7%. So we are consistently being able to continuously grow by 25% plus year on year, quarter on quarter. So that I think will continue in future also. And because our growth is more than our fixed cost, our percentage has gone up from 6.5 to 7.3% in the EBITDA margin, which is something which we should be able to continue in the fourth quarter also. As far as EPC is concerned, we got a very big order from UP electrification order, because of which we've had a growth of 157% in the EPC segment. And the result of that is that our profitability has substantially gone up. But the UP project is still only 1/3 of it is over. There's still a lot of work to be done. And therefore, that's the only thing which will be completed by next year. And that is the only question mark, if I use the word, in terms of how the company will perform as far as the EPC is concerned. Consumer product is well settled. There are no issues there. In EPC, otherwise everything is under control except for the UP project, which is a very huge project, and therefore it depends on the government funding and other things. So we will be very clear, I think, somewhere after the fourth quarter is over. That means sometime in March, April, we'll come to know how the EPC business will shape up in the coming years.
Could you just throw some light? When you say a growth of 25%, were you referring just to the consumer business growth?
Only consumer business phase. Overall, as you've seen, that our growth is about 83%, 157% coming out of EPC business and 26.7% coming out of our consumer product business. So consumer product is something which consistently we are looking at growing by 10% more than the market growth. Market growth is about 10 to 15%. We are looking at a growth of about 25%. So that is something which we have improved our distribution network. We got 190,000 outlets, which we have covered almost 600 districts all over the country. And therefore, because of that, we think that our sales will substantially continue to grow.
Right. Mr. Bajaj, with regards to the project business, what is the visibility in terms of the order book come FY20?
See, the visibility, there are two. One is 1,000 crore of TLT transmission line tower, which is very visible. There's no issue there. There's another 150 crore of our what we call elimination business, which is high mast and special project, which is again, whatever orders are there is very visible. There's another 4,500 crore order of power distribution, is where I mentioned earlier, is where the visibility is not very clear, whether that 4,500 crores will become 4,000 or 3,500 crores, we do not know, because it is under the government's what is called the Saubhagya scheme, which is getting over on 31st March. Whether it gets extended further, only time will show. It depends on the election. It depends on so many things. So there's a little uncertainty and a little vagueness as far as that is concerned. The order is there, but whether we have to execute or not execute, only time will show.
Right. Mr. Bajaj, obviously, while you are seeing execution of your order book at a fastened pace, this is resulting probably into higher working capital needs and working capital borrowings picking up. How are you funding it?
See, as far as the total funding is concerned, we've got a total, our billing for the year for the EPC business will be about, total for this quarter has been 1400 crore. Next quarter, again, we are looking at about 1100 crores. So total business of EPC will go up from a level of 2500 crores to 4000 crore. And therefore, unlike in our trade, in our consumer business, there's hardly any working capital required. Here you require 4 to 6 months of working capital. So our working capital has gone up by almost 600 crore. And we've got another 400 crores we've got advanced against our UP order. So therefore, our net increase is about 600 crores.
Okay, and just one last...
But that has been built into our costing.
Okay, got that. Just one last question with regards, and if you've already addressed it, just once again put into perspective for us with regards to your margin outlook and what you expect to maintain as a run rate by the end of the year.
As I mentioned, for the year it will be around the same EBITDA margins, maybe maintained a few percentage plus minus. But for the coming year, our issue is that it depends, because we have our own overheads and everything, and if the business comes down because they don't extend the Saubhagya scheme, then the margins will get impacted, and therefore we have to keep our fingers crossed that we get those orders to execute the same.
So currently a run rate of about 6% is what you can comfortably say for the end of the year, but for the next year it is questionable. Got it. Mr. Bajaj, thank you so very much for joining us. Appreciate you taking out the time.